Hello, how are we all doing? I suppose if anyone's here anyway.
Crypto Bash is here.
Crypto Bash is here. Bash is ready for it. Let me just get the links on. Right. Okay. If you just keep an eye on the chat, mate, while I tweet these links and stuff out.
Yeah, sure.
To be honest, actually, I don't think we might not have that many people join us with Jordan being live as well. So we'll see what we get anyway.
Yeah. Actually, don't say it too loud, or else Crypto Bash will leave as well.
I know, yeah.
That's Stonksy. Hello.
Right, okay. Well, that's it. With Jordan being live, obviously I won't tweet off his account and send it in the Telegram, but we are live. Let me I'll tell you what, mate, it's got even increasingly hotter than before. I don't know how, but it's hotter now than it was before, in my room anyway. We have fell down a little bit, haven't we? So I think when we come off stream, where was we when? I think it was here, wasn't it?
Yeah.
It would have been. No, it wouldn't. Hang on. What time did we come off stream? Oh, this here. Yeah. Here we go. Yeah, 3 o'clock. Oh, I didn't realise that we popped all the way up here.
Yeah, we did.
Okay. All good. Right. Well, welcome to the stream, everyone. As we wait for the interest rate decision, and Powell to speak. Let's see what we get. I
think there's quite a few people streaming tonight, actually. It's like, Jason Casper and what's his name? Sam Price,
Yeah.
But, if you want to enjoy a more select, small audience, then this is the place to be. So do give the stream a like, please. Both of you.
Both of you, yeah. Make sure you get the likes in. Let us know who we've got in the chat as well.
Yeah.
Let us know who we've got in there.
So far, it's just Crypto Bash, and Gonksy, and me.
Got Bash. Yeah, to be honest, we've had a few. We've got a few viewers over on X, I think. Yeah, 62 people have popped in.
That's good.
To the stream.
Hello, X people.
Yeah, so we just wait. I mean, what have you done with the last few hours, mate? That you've been on? You've
been off.
Yeah.
I was trying to make a video, another 6-minute, wonder video, but I was looking at Google in particular, the Google stock, but it didn't quite do what I wanted to. It kind of went down. I was hoping to see something really good with Stonksy, but it wasn't looking. I mean, it was good. It was good on the 1 minute, but I was waiting to see like a really good reversal signal. I didn't really see it, unfortunately, but I did buy some Google at like 150.4, which is slightly below where we are now.
Okay.
So I'm slightly in profit, I'll see what happens. What I'm hoping is we'll get something like, the 5 or 6 minute kick in with a nice green thing when it's showing a bit of strength, and hopefully ride it up, because Google crashed quite a bit this afternoon, you see.
Did it?
Yeah.
Ah, okay. Didn't know that. Jalapeno. Oh, got the legend Jalapeno in. Thank you for joining, my spicy friend.
Yeah, I actually saw him for the first time ever on Spud Show this morning, and
Yes.
yeah,
Okay.
it was good to see you, George.
Yeah. But we are coming into 9 minutes away. Oh, we're having a bit of an aggressive 1 minute candle here on Bitcoin, aren't we? Ooh. Okay. So, for those of you that don't know, the expectation is for the Fed to hold rates. So no change. We've got 8 minutes till they go. Let's refresh this, but it shouldn't really have changed that much, I don't think. So we'll have the rate decision come out in just under 8 minutes, and then at 1/2 the hour, we will have Powell come out. Oh, so it's up to 97.7 now. So yeah, the odds have shrunk even more by a couple of percent. It's 4.4 when we streamed earlier today. So yeah, Powell will come out at 1/2 the hour and give his speech, and then the press will ask him questions and he'll answer. But yeah, we are tumbling down on the S&P and Bitcoin, which if you would have took, let's see how close this got to them previous highs. Oh no, so it didn't get up to earlier today. It got up to 97.5. So yeah, but have you still got that order set, mate?
I have. I actually moved it down slightly. I've got it at 96.
Yeah, this looks a bit aggressive heading into the event, doesn't it?
Yeah, I've got it at 96.124.
Right.
I'm
Nice
going
to
leave.
see you tune in. Yeah.
I mean, with this, like, somebody must know something, mustn't they? You know.
Oh, 100%. Yeah.
Yeah.
I mean, it's pretty. I mean, even just by this, any other decision apart from a no change would be exactly like it would be completely what the market isn't expecting. I mean, say if they come out and cut it, the reaction will be wild because it's just not priced in at all.
Yeah.
So, yeah, that would be fascinating. It'd be great to watch live. But Jalapeno, yeah, are you going to be going on CSE live stream more often now, or what's your plan? I didn't get to tune in. I was busy filming a video. But did he have his camera on?
Yeah.
Did he? Oh, so
yeah, I was expecting some kind of Mexican guy, you know.
Oh, he's doxed himself now. Oh, I see, mate.
Not.
You're out there. You're out there now.
He's a northerner.
He's fully He is. He is a northerner. Not too far from me, actually.
Yeah, I guessed he was up your way.
Yeah, not too far from me. So yeah. Actually, funny. What's funny is, and I'm pretty sure we can say this because it's not exactly really doxing anything, but where I live now is actually where Jalapeno used to live. It doesn't live near me anymore, but where I live now, that's where he used to live.
All right, but you didn't know him then, obviously.
No, didn't know him then. But when we were speaking, when we met, yeah. We found that out, so we got a bit of common ground, me and Jalapeno, apart from other stuff. Pop my live stream. That's it, mate. That's it. Have you got the bug for it now? Got a bug for it. Oh, this is an aggressive drive down. Right, we've got 5 minutes to go. But this is a bit of an aggressive drive down, isn't it?
Still not going to fill my order, is it? Might do.
Yeah, might do.
I might lower it a bit.
I mean, the fact that it's selling into the event, does that suggest maybe that it might pop back up afterwards? I don't know.
Well,
or is it people just de-risking for the fact of maybe it's going to just completely nuke? You really can't just try and double guess this, can you? Like, I don't know.
You can't.
But yeah, do make sure, for those of you that are here, do drop a like. Do drop a like. Four minutes to go. I am absolutely sweltering. It is so hot in this room. I'm gonna pull up TMG's live stream on my phone. Actually, let's see what he's up to.
It's funny if he's watching us.
Is he? We've got some of our viewers are in there.
Oh no.
Yeah, Baldy McGinge is in there.
Splitter.
Baldy McGinge is in there. Let's go for who else is a viewer of ours? So yeah, Baldy McGinge. I tell you what, gonna have to have serious words with him, aren't we? TMG's got 106 viewers, so he's eclipsed us by tenfold. But we're still here. Yeah. Don't you worry, guys. Let's drop him a like anyway. Let's see what he's up to. I am absolutely sweating here. Like, really bad. I've got 3 minutes. Well, just over 2 minutes to go. I'll go in and mute them all on his stream. Are you a mod for a stream, Hal? Yeah.
Yeah. Just ban everyone. Put everyone on timeout.
Yeah. I tell you what, we're getting some big viewers on X. I don't know if they're still in there because you can never tell on X between live viewers and actually who's just dipped in and out for a couple of minutes. But 162 people have actually clicked on the live stream on X, which is probably the best in a while. And we do have 13 on YouTube, so we're not quite competing with TMG's numbers, but we're still here. We're still giving it a good old college try. And yeah, thank you very much for joining us. Yep. I am honestly melting. I don't know why it is suddenly so hot in this room.
Have you got like mega insulation there or something? Or...
No, I don't know what it is. I don't know what it is. It wasn't this hot before. Before I was actually quite cool. I'm gonna have to pull this down for a minute while we wait, actually. Right. Oh, who's ready? 14 people. Oh yeah, come on, guys. Make sure you all drop a like. Right, got 1 minute to go. Actually, less. 45 seconds. 45 seconds to go. What are we thinking, mate? What do you reckon's going to happen? Go on.
I think it's going to go up. I
think gun to my head, it's going to floor it to the upside. Let's see. Anyway, let's see.
I think so, because
everyone hold on to the hats. Hold on to your hats. Might not even get anything with it being like such the expected outcome. But let's see. Are we ready? Are we ready? Boom. What have we got?
Nothing.
Oh. What was it? Let me see what it was. Not having that much movement, are we? I'm guessing it was no change. It must have been no change. There's no way that it wasn't.
There you go. There you go.
There we go. Oh, that was a juicy pop. Yeah, they just held. They just held.
4.5. No change.
That took a while to get going, then, didn't it?
Well, I was clicking the flag thing on TradingView, and that didn't appear till the minute I saw the candle move.
Yeah, that took a while to get going, but we did drop down to 96,150-ish, and we did pop up to just shy of 96,600. So a bit of a whipsaw 1 minute candle, but nothing too major, like. But we are now moving back on up towards where we started dropping down pre-announcement. So, yeah. Go on, give it a little bit of a push. Give it a push. Right, well, now we wait for Powell's Now wait for Powell's speech, I guess.
Yeah.
Nothing too major, like. Same thing on SPX. We got a bit of a whipsaw going on. So that's what we got over there. But yeah, I suppose we might even get. I think we'll probably get more of a price movement during Powell's speech, to be honest.
Yeah. I mean, I think generally, he's quite positive, isn't he? And he normally says the right things. How many times do you think he's going to say "well anchored"?
At least probably about 4 or 5, I think.
We should count him, shouldn't we?
Yeah, he's well anchored to pissing off Trump, I think, is what he is. He's well anchored to pissing off Trump, but we've pretty much now fully reversed the pre-event drop, which I suppose is positive if you're looking for upside action.
Well,
so would this have triggered your original entry? 96,160-ish.
Yeah, it bloody would actually.
Would it?
I think it would. Yeah.
Oh well.
Yeah.
Well, there's still time.
Yeah.
Well anchored.
I'm going to leave it where it is because no, I don't know if it would actually. Oh no, yeah, it would.
Would it?
Yeah.
Yeah, nothing even to. We've really not had anything. I don't think that these events are going to do much until the Fed starts shifting policy. So as soon as they make a cut, then these meetings will become very interesting again then, because then it's kind of like, right, okay, are they going to cut or are they going to have a hold? Where now it's pretty much just nailed on. They're going to hold every time. So there's not really too much like that can change. Going into it, it was pretty much near 100% nailed on that it was going to be no change.
Yeah.
So I think as soon as they make one cut, now whether that comes in June or July or even whenever, I mean, if we run through, so we've got now June's meeting is in another month and a half. So this is, middle, slightly on towards the second half of June.
Yeah.
Then again for July, right at the end of July. And then obviously August is a break. And then we've got middle of September, so another month and a half. Then October, and then November's a break. And then obviously December before Christmas. So there is only another 5 meetings. And they are quite spaced out. So we've probably got like another 6-7 weeks before the next one. And then right at the end of July, middle of September, and then end of October. And then pretty much we're on to the end of the year then, aren't we? Which is wild when you think about it. Like, we're nearly halfway through the year.
Hello. Only just
already.
Christmas.
Yeah, literally. Wiz, how we doing? Great to see you. Evening to you, mate. What time is it for you there now, Wiz? What time is it for you?
Where is he?
He is in the Middle East at the moment.
All right.
Yeah, he's in the Middle East.
The Wizard of Oman, wasn't it?
The Wizard of Oman, yeah. 10 p.m. Okay. Are you sticking around for the Powell stream? I'm just watching TMG streams like simultaneously. He's currently looking at... What's he looking at? Now looking at Bitcoin. He was looking at Sol Bitcoin. Now he's looking at Bitcoin on the daily. You're just about to order... 10 o'clock! It's 10 o'clock and you're just about to order dinner. Why? Why so late? Why so late? Or is that just like the norm?
Don't know. Maybe it's like Spain, where everyone has the dinner at 10 o'clock at night.
Yeah, maybe. We are now. It's been cycling the F1 track. Okay. Oh, wow. Mate, you're living the life. You're living the life, aren't you? Right, we're now kind of retracing this initial pump. So we came up, didn't we, to right at the top of this V, and then have now fell back off. So we've got 24 minutes until Powell starts opening his mouth. So does this get? I mean, are we going to go lower? How are we going to go lower? That's a nasty candle on the SPX, which is probably what's dragging Bitcoin down. That is a nasty one. A couple of minute candles there, and Bitcoin is taking the tumble. Yeah.
So what is actually going on at the moment? Are they just
nothing? Literally, there's nothing. There's nothing going on now until Powell starts speaking, apart from the market just digesting what's happened.
Okay.
So, yeah, I think maybe now the market is just kind of doing its thing, anticipating what Powell might say. Google got wrecked. Yeah, Saver Crypto was talking about that. Let's see. Google. Oh, well, what's actually happened with this? Why? What's happened?
I don't know, to be honest.
It started falling off. 8% down. What's happened? What has there been in the news around? I didn't realize this. I didn't realize that it fell so much. And that's like not even pre-session or at the start or anything. That was kind of around 10 to 4 hour time. So the market had been open an hour and 15 minutes or so before it started to fall. I mean, that is an aggressive sell-off. What caused this, Wiz?
Oh, Apple announced they're putting AI search in Safari.
Right.
Okay.
I mean, shouldn't that also then be kind of... That's interesting. Because what? So then it's kind of going to stop people going to Google. But that should, in my eyes, I don't know whether I'm wrong on this, but shouldn't that have also affected Microsoft, considering they've got such a big stake in OpenAI? Because surely that'll take people away from ChatGPT as well, if you can just go on Safari and Thingio it instead. I don't know. I mean, I wonder why it's not affected them so much. But yeah, that is a big, big tumble, that. You'd imagine that will get retraced, though, won't it? You would think.
Oh, I think so, yeah. Yeah.
So it might be a little bit of an opportunity there on Google, perhaps.
I'm hoping so.
Bitcoin is being put to the sword here. Ooh. Oh. It's being put to the sword. SPX just dragging it down.
Okay. Well, that order of mine filled.
It's been really nice 1 minute price action today on Stonksy and Bitcoin. Don't look at the 1 minute too overly, really, but it's still doing its thing the same as it always has on the 1 minute. And I am sweating. Did you hold your nerves on the short? No, I ended up getting stopped out in profit.
Which is nice.
Which is nice, but yeah, not ideal. But yeah, I'll be honest. I kind of wish I would have reshorted it. I wish I would have had orders in ready to reshort it around these top levels, but yeah, I didn't. So yeah, I mean, I still kind of think maybe we can go higher. But we need SPX relief, really. If this thing starts tanking back towards, 5,400, 300, 200, Bitcoin is going down. As simple as that. Bitcoin can't survive an SPX nuke without this being dragged down as well. Yeah. Still riding mine down, just waiting to get long on Fartcoin again. Let's see Fartcoin. This is going to come back down here, Wiz. And I'm telling you now, looking at, let's see. Yeah, this is gonna come back down here, I think. 60 cents, mark it on, in my opinion, unless it holds here. Potentially holds here. But even then, 74, not that far away. But I would imagine it comes back down for it. It never had an SR test, did it? Never had a retest of here. But we'll see. I don't know. I would think it would probably coming down towards 60, but maybe it doesn't. Not like not a nice 4-hour candle on Bitcoin, though, is it? Kind of just looks like another toppy outy bit. I don't know. Plenty of time to think it though, to rescue it. I mean, low time frame. We want to see price start holding. Yeah, want to see price start holding and stopping the bleed, and then you'll be loving it, mate, won't you? Because you're really long now.
I will. Yeah. I mean, it's slightly squeaky bum at the moment, I must admit.
Yeah. So you're looking at the higher one, I'm guessing, was 80 to 87. We're running back up slightly now. Right, we've got just over 15 minutes until we have Powell start speaking. Let us know what you'd like us to look at. If you'd like us to look at anything at all, let us know. Or any thoughts on the market. Wiz, who are you actually away with? Because I know you was at Token, but haven't most people at Token gone now? Everyone's pretty much back, I think, aren't they? So are you in on your own, or have you met someone else? Or was someone else in a Token with you? Or have you met someone else out there?
It's a bit nosy.
Me and Wiz are tight.
Okay.
I asked the real questions. We all want to know who Wiz is in Abu Dhabi with. My best pal lives in Abu Dhabi, so being seen him. See, there we go. Wow. There we go. Now, if I never have asked that, we would never have known, would we?
Yeah, okay.
Kato short. Wiz is taking a Kato short. Let's see, where's Kato?
Oh, Kato's gone mad, actually. You know.
Yeah. Oh, look at that. Is that a liquidation candle to the upside? Is that? Oh, tell you what. Oh, yeah. Is that a liquidation candle to the upside? Trend reversal on the cards. Oh. Oh. Let's go and zoom out. 4 hour. Oh, yeah. You might actually be right there, Wizzo. There's your supply zone for the sell-off. Look at that. Yeah. You might actually be right, mate.
God, I wish I had the balls to trade those kind of things, because yeah.
What, to trade Kato?
Well, just them things that move massively like that, because I'd just be scared that it would just whip through that area, and then before I knew it, I'd be like 90% down or something, you know.
Yeah.
Or that I'd put a stop loss in it and get hit straight away or something, you know.
I know what you mean.
But I guess the way to do it is like, you know, low leverage, reasonable amount of margin, and just yeah, you know.
Yeah.
If it doesn't work out, look for a different level, isn't it?
Yeah. 100%. I kind of like the idea of that, I'll be honest. I do kind of like the idea of that, Wizzo. What would that be? Turbo What would that be? So if this had actually topped out, what would you be able to short it with? So that's 6. So it's 10%. So there's your liquidation on that. Then potentially, what was he? 30. Yeah, I was just calculating what potential leverage you could use without getting liquidated. So there's your kind of 10% move. So that's your 10x liquidation there.
Yeah,
interesting.
I wouldn't go any more than like 3 really on that.
Yeah. But so what price did you get filled at then, mate?
Oh, me? Bitcoin. Yeah. Well, bearing in mind I was long already, wasn't I? It was indeed. It was 96,078. So I'm slightly in profit.
Oh, that's nice. That I do you know what? My gut is telling me that you're going to be very happy with that position. Come later on tonight. Maybe I could be optimistic or maybe I could be wrong, but I think you might be very happy with where Bitcoin goes after.
The only thing is I'm looking at this on the 6-minute time frame, which is my new favorite, and Stonksy was red, and we've actually got one of those red confirmation thingies as well.
Yeah.
That said, at the moment the green ones are working better than the red ones. So the red ones are tending to go sideways, sort of. No, I don't know. Actually, they are quite good. So that's sort of bothering me a little bit. I don't know. I'm almost tempted to cut it actually.
Zoom out on the 1 day and it closed the structure. So that's about Cato. Turbo has been fun to trade last few days, says Wiz. Interesting. Hey, Jeff, how we doing? The legend Jeff. Big up, Jeff. Jeff. And listen to him as well. Smash the likes. Do smash the likes if you're watching.
Definitely do.
And if you're watching over on X, do hop over to the YouTube channel, please, and do subscribe. And drop us a like. It'd be great if you could do that. Whoever's watching over on YouTube, on X, sorry. Hello, and yeah, welcome from the other side. But yeah, big up Jeff, absolute legend. But Wiz has been enjoying trading Turbo.
Right.
We've got 10 minutes to go.
Yeah, I was just checking that link you gave me. There's nothing happening. Just a picture of the White House, really. That's it.
Yeah, it will just come on around past. It will just it just suddenly just comes on and starts.
Okay.
And then what we'll do is we'll do it like last time. For those of you that were here last time, we'll put the live stream on and we can just watch it. We'll just watch it together. And then obviously Powell will speak and then we'll have the questions. We'll watch it and then we will hop off. Do we exit all trades? Up to you, mate. Completely up to you. I don't really know what's going to happen from here. It's hard to judge because nothing's really changed, has it? There's literally been no change. And is the market really going to expect Powell to say anything different? If he comes out, dovish and kind of alludes to a rate cut in June, then obviously the market will trade whichever way it takes it from there. I don't immediately think that's just straight bullish and then the market's going to turbo mode up. No. But if he says anything, that maybe catches the market off guard, then maybe, we'll probably get a move one way or another. I think definitely, Bitcoin needs to clear this upside level, doesn't it? This is the next task, like we had here with Bitcoin just repeatedly smashing this kind of 95.5 level. This kind of 90, below 98, from 97.5 upwards is kind of the zone now to then separate it. Okay, we get above here. Now let's go to 100. So if it can get above here, then or it seems like it's good to go to that big round number again.
I'm gonna put my stop loss in profit. I think.
Are you?
I don't trust it.
No. Jeff says it was in a series short and just closed it. Well, it's never a bad idea to take profits, is it, mate? And Enforce, how we doing, mate? Great to see you. Thank you for joining.
Hello again. I mean, what normally happens with these Powell things is like somebody asks a question about crypto, and he starts talking about crypto, and then he just starts, he starts talking about crypto, and then the market pumps, and then he starts talking about stable coins, and the market goes down.
Yeah. Right, mate. I'm just gonna have to make that switch. It won't be a sec.
Okay, no worries. I'm just wondering if there's a way we can show the chart and the live stream at the same time. I don't know if we can actually.
Yeah, we can.
So
what I did last time, but what I had to do was I had to actually share my screen. So like instead of sharing
right.
I had to share my screen and then just pull up two tabs next to each other, one with the trading view tab and then obviously one with the live stream tab.
Okay. Right.
You don't have to do that if it's going to be a bit of a pain for you. We can just show we'll just show the press conference.
It might be a bit of a pain with the computer I'm using at the moment because, you know, I might get like notifications popping up, which I don't really want to share publicly. Yeah,
no worries, mate. We'll just hang on. I'm just making that switch if you can entertain.
You know, like your subscription for Pornhub is due or something. But yeah. So I suppose I could show you my I'll show you this trade actually. Just while Dave's moving. What was it now? That one. Yeah, so this is the one I was talking about this morning because this is the one where I thought I got like a really good entry. And then it was actually only like $44, you know. So what I did is I set this order lower. I mean, that's 6.43%, $74 in profit at the moment. So I don't know. I just don't trust it. I don't know what's going to happen.
Well,
so if this closes, I don't care really.
The thing is, you've got so you set your stop loss. Oh, have you set it all the way up there?
Yeah.
Well, you've got a lovely entry, haven't you?
I have. I don't know what to do.
I mean, I suppose. Yeah, I suppose you haven't really paid much in fees, have you? So
no.
It's a bit of a tricky one, isn't it? I really don't know what. It's like when Jeff's saying, you know, do we exit or trade? It's really difficult to know what the market's going to do as soon as he starts opening his gob, isn't it?
Yeah. To be honest, if I can make $100 out of that, I'd just close it.
Would you?
Yeah, I think so. Yeah, because that'll do.
Not a bad day's work, is it?
It's all right, isn't it? Yeah.
Yeah, you cannot complain. But we do have 5 minutes to go.
Okay.
Do make sure you drop a like. Yeah, drop a like. Great to see you. Thank you for joining for the second stream of the day. I think maybe this should boost our little algorithm place as well, maybe for tomorrow. Given that we've streamed twice in a day, maybe YouTube will favour us and push us out to more people. Who knows?
You would hope so, wouldn't you?
Yeah, you would think. You'd like to hope so. But I'm looking forward to seeing what Powell is going to say. So, are you going to be running the live stream and off the same window that you would view the chart?
Yeah.
Yeah.
So what I thought I'd do, I'm just setting up the trading view at the moment.
Yeah, I was going to say, because what we could maybe do is just flick back to the Bitcoin chart every 1 minute or so, and just look at what the price is doing, and then just watch the live stream, flip back every 1 minute or so, and just see where the price is at. But we can give
like a little audio update, can't we? If it does anything major, and just say, "Oh, Bitcoin's just ripped up," or "Bitcoin's dropped like a stone." Don't know.
Yeah.
But it is pushing up, like saying, yeah. I mean, you got. Tell you what, it was a good decision, wasn't it, to pull that entry down, because you got a better entry then.
Yeah, I'll tell you what I did. I used that. Is that VWAP thing that Jordan uses? You know, the VWAP standard deviation.
Oh,
mod
yeah.
That has the bands at the top and the bottom.
Yeah.
And usually when I'm not sure about an entry, I'll just go for the very bottom of the VWAP, and I'll put an order down there. And you know, I mean, quite often it won't fill, but like I just had a feeling it might then. So that was why I moved it down, because obviously during the day, that VWAP thing, it's this one here, isn't it? It's that thing there, you see. So as the price was coming down, you know, I just moved it to the bottom of there. Anyway.
Yeah, very nice.
It's called that VWAP standard deviations. Like that. That is one that Jordan uses occasionally as well.
Yeah, I've seen him use that before. Jeff says, you and the team at care. Yeah, mate, I believe you are sending us over a care package, aren't you? Thank you very much for that, Jeff. Very much appreciated, mate. It's very kind of you to do that.
Well, do you have to send hobnobs back or something instead, or?
Not that type of care package.
Oh no, what am I doing? Oh, hang on a sec. That's what I want. That's what I want.
Oh yeah, look at that. There we go. We're ready for it. 2 minutes. I can't remember if he even started on time last time.
Didn't he quite famously not start on time?
I think it was a couple of minutes after. And it's dead funny because what that's showing there, it kind of just like dissolves or like fades away, and then he's just stood there at the podium ready. Like, it's really weird. I think he's like, you could imagine what a conversation with him would be like, can't you? It would be very like mundane, very serious, very like prim and proper.
Do you reckon?
I would love to speak to him. Yeah.
He seems like a really nice fella to me, actually.
Yeah, he does. Seems like a really nice fella to me. I'd love to speak to him. And
he likes his cycling as well, as do I, you know.
Oh, does it?
Yeah, so we could have a chat about bikes, couldn't we?
Well, while it's nice, mate, you need to be making the most of that.
Yeah. I do.
Yeah, I would love to meet him in person.
But I think I would laugh when he said well anchored.
Yeah, I just say, you well anchored today, Jerome. Do make sure you both drop a like on the stream, though, please. Do make sure you like, and yeah, we will be hitting the press conference as soon as it comes on.
Right.
So you can.
I'm just wondering where to put my mic, because I'm using like a Shure SM56, which is like SM58, which is like it's like what vocalists use in bands, you know. So it's quite directional.
Yeah. Oh, here we go. Here we go.
Oh, hang on.
Now, how did I can't remember how we zoomed it in last time.
Oh, hang on. Well, if I go...
I think you click that button there, yeah, if you click that.
Oh, no, that one.
Oh, yeah, there we go. Right, let me turn the background music off.
Can't hear nothing.
Any sort of audio coming from them yet? Have you clicked the thingy on that to the left?
Yeah,
oh, there we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas.
He's getting a nice pump in it. He's getting a nice pump. Yeah, I'm thinking maybe we just leave the conference on, you know. I think it's fine. I'll just kind of pop in with the mic and just tell people where the Bitcoin price is.
Okay.
We'll just leave it running.
But the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored.
Yeah.
Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Let's just leave the questions on now, mate. We'll just let the questions run.
Well, the screen in.
A lot has
Yeah,
happened
just leave it on,
since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago, labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now, it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and as that develops, and I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, so let's look back and see where we are. So to go through 2024 up to the day, we've had unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension. So let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. You know, we haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today. And we may never face it, but you know, we have to be keeping it in our thinking now.
Edward.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
You know, it's going to depend. I think you have to just take a step back and realize this is why we are where we are. Is you know, we're going to need to see how this evolves. We know more about how this is going to settle out and what the economic implications are for employment, for inflation. I couldn't confidently say that I know what the appropriate path will be.
So following on that, just, you know, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And you know, we all look at all these sentiment and read many individual comments just to get a better feel. And you know, businesses and households very broadly are concerned and, you know, postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's, you know, it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we of course tapered and everything. And then we immediately went into QT, and we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. It's we knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not in your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. You know, what we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, you know, wanted to hear it that way, but that's not at all what we meant. So that's just not a correct reading of our, but I can see how, you know, maybe people found that confusing and, you know, we have to take that into consideration.
Jolene.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, you know, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or okay, so you know, we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there'll be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. You know, people are not getting laid off at high levels. You know, initial claims for unemployment are not increasing, you know, in any kind of impressive way. So the economy itself is still, you know, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Chris.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, you know, what kind of interest rate decisions you will make later this year. So does that, you know, in March, there was guidance that 2 cuts might happen, you know, 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
You know, we don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. And you know, we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we have the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. You know, it could include us holding where we are. We just are going to need to see, you know, how things play out before we make those decisions.
Great. And just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How how do you handle those
Well,
challenges?
you just captured this is the issue with the two goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other. And if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. You know, if I think you know what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, you know, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. You know, I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
You know, we don't give Congress fiscal advice. They're going to do. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path, and it's on Congress to figure out how to get us back on a sustainable path. And it's not up to us to give them advice.
Or do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risks to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see significant deterioration in the labor market, of course, that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Hey.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decisions. So the volume of the imported goods increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. it may actually go into the third quarter too. And so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories government or inventories government. Anyway, it's a cleaner read on private demand, but that too probably was flattered a little bit by by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really going to, I don't think it's going to affect our decisions. I will just say though that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economies. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses. And so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right that we had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Matt.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you're monitoring the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else. And,
Okay, I think we've had enough, haven't we? What do you reckon?
Yeah, I think that it's either getting towards the end of the questions or on the very boring questions anyway. So I think we've been going on for nearly an hour and a half now. So where's Bitcoin up to? Let's
Well,
see.
it came down a bit, yeah, and
Yeah, came back down and then bounced a bit. So it's kind of around the same levels as it was leading into, a little bit lower than originally when it was leading into the rate decision, but not too much lower.
yeah. So it's a pretty, yeah, okay. So
SPX has had a good bounce, so maybe Bitcoin is lagging a little bit. The SPX has had. I'll just pull that up before we jump off. But the SPX had a decent push up as Powell was speaking. So maybe Bitcoin is lagging a little bit and gets a push up in the Asian market. I'm not too sure, but big thank you to everyone that joined today and followed that on. I hope you enjoyed it.
Thank you.
Obviously, this is a rarity because the next one will be to the 18th of June, I think it was. So just after mid-June-ish. So we've got a bit of about 7 weeks before the next FOMC. So yeah, hope you enjoyed it though. Thank you very much for joining. Do make sure you drop a like, check the links in the description, sign up to BLOFIN, get your Stonksy plan for 20% off your first month if you haven't already. And thank you, mate, for putting the conference on. That was great.
no worries at all.
Yeah, well, everyone enjoy your evening or whatever time zone you're in. Enjoy the rest of your day. You enjoy the rest of your evening too, mate. And we will catch you all tomorrow for the usual stream.
All right.
Right. See you all later. Bye-bye.
Bye.